Index funds can be one of the best investments you can make during your lifetime. But how exactly do you find the best ones? Because the last thing you would want is to put your hard-earned money into an index fund in which you can't transfer out of. Look no further because I found the 5 best Fidelity Index funds that have massive growth and cost nearly nothing to own. Starting with number 5, we have ticker symbol FNCMX, or the Fidelity Nasdaq Composite Index Fund. This fund seeks to track the Nasdaq Composite Index, which includes more than 3,700 stocks on the Nasdaq Stock Exchange. But more importantly, this index fund is heavily weighted towards the technology sector, with its top 10 holdings making up almost half of the total portfolio at 43.68%. FNCMX holds 3,376 stocks, which includes top holdings such as Apple, Microsoft, Amazon, and others. With the main objective being growth, FNCMX has had an average annual return of 14.80% in the past 10 years. Meaning if you invested $10,000 10 years ago, you would now have a total value of just under $40,000. But now we must address the alarming issue with this fund, and that is the expense ratio. Coming in at 0.30%, you can expect to pay $30 for every $10,000 invested. With this expense ratio being by far the most expensive on this list, you might be asking, Brandon, why is this even on the list? It's no surprise that the Nasdaq index has outperformed the S&P 500 over the past 10 years, with the Nasdaq being heavily weighted towards growth technology stocks such as Amazon, Apple, Microsoft, Google. You can expect more volatility, but especially a greater chance of growth in total value. That being said, on the one hand having an expense ratio of 0.30% and on the other having massive growth compared to the S&P 500, FNCMX still holds great value. Continue to watch because at the end of this video, I will be comparing Fidelity's index funds with Vanguard's index funds and why the results may shock you. Moving on to number 4, we have FZROX, or the Fidelity Zero Total Market Index Fund. This fund seeks to provide investment results with a broad range of large, mid, and small cap stocks from the overall total US stock market. Since inception in 2018, FZROX has had an average annual return of 8.32%. Meaning if you invested $10,000 from day one, you would now have a total value of just under $15,000. This fund holds 2,807 stocks, which includes top holdings such as Apple, Microsoft, Amazon, and others. Now I know what you might be saying, but Brandon, you said this fund tracks the overall total US stock market. Why can't I just invest into something like VTI or even VTSAX? And my answer is simple: zero fees. With an expense ratio of 0.00%, and yes, I'm trolling a little bit, it literally costs nothing to own this fund. Wow, big deal, Brandon. Yes, it is, and I will explain how it can affect your long-term profits later on in this video. Moving on to number 3 on the list, we have ticker symbol FNILX, or the Fidelity Zero Large Cap Index Fund. This fund seeks to provide investment results from the 500 largest companies in the US by capitalization. Since inception in 2018, FNILX has had an average annual return of 8.40%, meaning if you invested $10,000 from day one, you would now have a total value of just under $15,000. FNILX holds 511 stocks, with top holdings similar to the previous funds on the list, like Amazon, Microsoft, Nvidia, and others. Okay, I'm hearing it again. Brandon, VOO sounds just as juicy. Why bother with this index fund? 2 words: expense ratio. With an expense ratio of 0.00%, you literally can own this index fund for free while getting the same exposure as investing in something like VOO or even SPY. But I will confess one thing, and that is the inability to transfer between different investment platforms. You see, there is a big catch when choosing to invest in these Fidelity Zero Cost Index funds. These funds are only offered through Fidelity, so if you wanted to transfer your position with Fidelity into another broker like Vanguard, for example, you would have to sell your total position with Fidelity, which would trigger a taxable event due to you having capital gains, assuming you profited. Who wants to do that? That being said, if you know that you would never transfer out of your position and switch trading platforms, then these zero-cost index funds may be for you. 2 more index funds on this list. Let's not waste any more time and move on to number 2. We have ticker symbol FSCAX, or the Fidelity Total Market Index Fund. This fund seeks to provide investment results from a blend of small, mid, and large cap stocks in the overall US stock market. In the past 10 years, FSCAX has had an average annual return of 11.79%, meaning if you invested $10,000 10 years ago, you would now have a total value of just over $30,000. FSCAX holds 3,990 stocks, which includes top holdings such as Apple, Microsoft, Amazon, and others. Damn, are any of them different? Now, seeing how you are able to transfer out of this index fund to another investment platform, should you choose, that does mean there is an expense ratio. And I'm happy to say that that expense ratio is only 0.015%. Yes, meaning you can expect to pay $1.50 for every $10,000 invested. Pretty damn good. So let me get this straight. You're not limited to just Fidelity like you are with the zero-cost index funds. You have exposure to the total US stock market, have an above average annual return in the past 10 years, and a dirt cheap expense ratio? And it's not number one? Yeah, because at number one we have none other than ticker symbol FXAIX, or the Fidelity 500 Index Fund. This fund seeks to provide investment results from large cap stocks included in the S&P 500. In the past 10 years, FXAIX has had an average annual return of 12.55%, meaning if you invested $10,000 10 years ago, you would now have a total value of just under $32,000. FXAIX holds 507 stocks, with top holdings such as Apple, Microsoft, Amazon, and others. I guess that's the theme of this list. Now, just like the previous index fund, FSCAX, FXAIX is not limited to just Fidelity, and therefore has an expense ratio of just 0.015%, meaning you can expect to pay only $1.50 for every $10,000 invested. Now, with S&P 500 exposure that this fund offers, combined with the above average annual return of over 10% since inception back in 1997, and the dirt cheap expense ratio of 0.015%, FXAIX is easily the top choice as the best Fidelity index fund to invest in 2023. All right, Brandon, again, you did your research. But why invest in these index funds when I can go and invest in identical index funds that Vanguard offers? Okay, so let's take the number one index fund from this list, FXAIX, and choose the identical index fund from Vanguard, ticker symbol VFIX. Both track the S&P 500, have nearly identical returns over the past 10 years, and feature the exact top 10 holdings as one another. To invest in VFIX, it has a minimum investment amount of $3,000. FXAIX has no minimum to invest. VFIX has an expense ratio of 0.04%, whereas FXAIX has an expense ratio of 0.015%. Brandon, come on, that's barely any difference. We're talking $4 for every $10,000 invested versus $1.50. Don't disrespect me, bruh. Okay, so let's just say you have two positions of $1 million in each. This means at the end of the year, you would pay $40,000 in fees for owning shares of VFIX. But on the other hand, of owning shares of FXAIX, at the end of the year, you would only pay $15,000 in fees. Find me someone that wouldn't mind having an extra $25,000 every year. Links for all the research that was done for the making of this video will be in the description below. I appreciate all of you, and click here or here to see what are the 5 best monthly dividend ETFs to invest in 2023. Peace.